Tech giant Apple plans to shift its Worldwide Developer Conference or WWDC to an online-only experience for 2020 due to the coronavirus outbreak. Says it will donate $1 million to San Jose organizations to offset losses occurring from cancelling the event. Y Combinator plans to make its summer 2020 accelerator program virtual, proves that even the world's most premier accelerators are also not immune to having businesses reshaped by coronavirus. Alibaba co-founder Jack Ma plans to donate 5 lakh coronavirus testing kits and 10 lakh protective face masks to the United States. He has already pledged 2 lakh protective masks to the European countries. Airbnb plans to eliminate cancellation charges and gives full refund in case of cancellations owing to coronavirus pandemic that continues to disrupt travel plans. Oyo offers cash to hotels in Japan to join its platform as coronavirus increases the demand for rooms ahead of the 2020 Tokyo Olympics. Oyo will pay new hotel partners a sum which is equal to a proportion of their revenue in 2019. Car service provider Pitstop raises $2.5 million in its first round of funding led by Landmark. The fund will be utilized to expand the company's services network to 15 more cities and more garages, and also have better doorstep service network. Well, those were the headlines we were tracking for you today. You're watching Startup Street. Now, the last few days have seen online grocery retailers such as Big Basket and Grofers report a huge surge in orders as people purchase staples like rice and pulses along with sanitizers, diapers and other personal care items. This rush to stock up supplies comes on the back of malls and restaurants being shut down across big cities in India. To talk more about how e-retailers are dealing with this huge spike in order, I have with me Hari Menon, but we are going to come to that in just a bit. I'm just going to check if we still have Hari Menon with us. Okay, all right. We have Hari back on the show. Hari, thank you so much for talking to us on Startup Street. Let me quickly talk to you about what kind of spike have you seen in orders across which cities are you seeing them, and what are some of the items that are highest on the demand when it comes to your platform?
Hi. We've been seeing a huge surge, especially over the last couple of days. Since most of the cities that we operate in have started announcing lockdowns actually as far as the city is concerned. So we've seen surges which are as big as double the volumes that we normally do in a day, and we've seen also basket sizes jumping by almost 15 to 20%, which is each order value. So it's been really large. A couple of weeks ago, the only item that was seeing a surge, or a few items that were seeing a surge, was essentially sanitizers and hand washes and things like that. But over the last 2-3 days, the kind of categories that we've seen are essentially daily essentials. All the staples, which is rice, pulses, sugar, atta, fruits and vegetables, the basic essential personal care, hand washes, etc. And that's really seen a huge surge. It shows that people are actually stocking up, but we are not actually too worried about that as of now, because we're not seeing it as a big trend in terms of people buying more. However, we are telling customers that they don't need to stock up because supplies are not going to be an issue.
Yes. Yeah, exactly, Hari, because that's something that I was going to ask you. How do you plan to crack down on hoarding? Is that even a possibility? Are you seeing individuals order a lot more? And if that happens, then do you have some systems in place to kind of crack down on that?
Yeah. We have simple systems which basically limits the quantity that a customer can buy. And we haven't yet enabled that because we're not seeing a worry on that front as yet. We are not seeing huge quantities. We are seeing quantities which are definitely higher, but it's not a big concern right now for us to enable quantity restrictions as yet. So we'll keep watching this carefully. And what we are all the time doing is telling customers not to worry, because what we are geared up right now is on supplies, and that shouldn't be an issue at all. Because most of the items that I talked about are our own private labels, and hence we have huge control on production, right? And we are able to produce the quantities that we need. And so that's not a worry at all. So we've told customers not to worry, and I'm hoping that, they wouldn't unnecessarily stock up.
Okay. Could you quickly tell me what is the increase in the total order value, like on an average, if you can share some numbers with us?
So basically, our normal, order values are about 1,500 rupees. We've seen surges which are now almost about 15 to 20% higher. That's what we're seeing, and overall volumes in terms of orders basically almost doubling. That's what we've seen over the last couple of days.
Okay, usually businesses such as yours are capacity dependent, but you have clarified that since you have a lot of products that are your private labels, so supply is clearly not a problem. But what about delivery? How is that being impacted? Could you talk to us about the output side?
Yeah, sure. That certainly got impacted because, one of the things that you can't build overnight is capacity, because, it involves physical capacity. So we plan for capacity in the beginning of the month, and it's difficult to basically add storage space, for example, or bring in more vans overnight, or add people overnight, right? So that takes a little time. But we had started seeing this trend about a week ago, and we had started planning to also increase capacity. So we are in the process of doing that. While we have fixed supplies, I think the capacity fixing will happen over the next couple of days. And I think over the next couple of days, we should sort that out also. Till such time, I think customers will see delays in delivery, which I think they're comfortable with right now, because they understand the situation that's been a sudden surge, and we should be able to fix capacity, which is essentially storage space, which is essentially the vans and the bikes and the people, and which we'll actually put in place in the next couple of days. Our teams are working actively on this.
Hari, quickly, before I wrap up, could you tell us what is the contingency plan? The fact that you're saying that you will be in a better place in the next couple of days, so would that mean hiring more staff, or would that mean getting more people when it comes to your logistics partners, your last mile delivery partners? Would that add more pressure on them? Could you tell us who those partners are and what's the plan?
No, so we actually do most of the deliveries ourselves. So it's essentially hiring people, right? So that's what we are doing. Okay. Which I think we are finding people who are people are available right now, because there are other businesses, I guess, which are slightly slowing down. So there are people who are available. So people we are able to add. We have a few delivery partners who are also completely gearing up. We have van suppliers who don't see an issue in terms of giving us the number of vans that we need. And storage space, we are creating them right now in terms of the available space right now, and trying to make sure that, suppliers actually supply more often. And when they supply more often and frequency is higher, we require lesser inventory. So we're trying to plan some of those things well, so that we get over even these delivery delays in the next couple of days.
All right, so that was Hari Menon telling us that Big Basket is planning to hire more people to kind of shorten the time when it comes to deliveries. Hari, thank you so much for talking to us on CNBC-TV18 Startup Street. Now on What's Brewing today, we have another startup called FamPay. The payments app for teenagers and their families has raised an investment of $4.7 million in its seed round, and the round was led by Y Combinator, Venture Highway, Sequoia India, and Global Founders Capital. FamPay is co-founded by IIT Roorkee mates Kush and Sambhav, and the duo felt that there is a huge gap in the market when it comes to Gen Z having an understanding about the fundamentals of personal finance. To talk more about this deal and FamPay's business model, I am now joined by Sambhav. Sambhav, welcome to Startup Street. Firstly, talk to us about your startup. The app essentially allows, as I said, teenagers to get a card without having a bank account, and generates their interest in personal finance. Talk to us about how exactly are you doing that, and what you need to do to encourage teenagers to take interest in this.
First of all, thank you so much for inviting me to the show. It's an honor to be here. So yeah, talking about like how it's going to impact the personal finance thing. So what we do is we create a family account on FamPay where a kid can sign up and invite their parents, and their parents basically top up the FamPay account, and that money can be utilized by the kid to pay at their favorite stores by using the card that we give, or they can use the app to make P2P payments. That is, they can send money to their friends or family members. They can scan and pay via UPI. So that is how the product functions.
Okay, Sambhav, considering that this is your seed round, you've actually raised this round from some of the biggest names in the business, Y Combinator, Venture Highway, Sequoia, and even the angel investors that you've been attracting, like Amrish Rao and Kunal from Cred. It's a huge and a very illustrious list out there. So talk to us about what attracted all these folks to bet their money on your business.
So the primary thing that everyone's eyes was hooked on was that this market is completely untapped and no one has actually looked into this market closely. So the kind of insights that we were drawing for teenagers, because every other product that you see in the market currently talk about not just fintech. If you talk about any other product apart from edtech, it's primarily focused on adults, right? So the scope that is here to do innovation in not just payments, but for every other service that can be given to the teenagers, that is what attracted most to all the investors.
Okay, I believe FamPay is still coming out of its stealth mode to launch the product, and this product will be available both on Google and the App Store. Talk to us about the cards that are going to be issued in partnership with IDFC First Bank. What are the timelines looking like for the product to get launched and this card to actually come out and for teenagers to use this?
So, we are currently testing our Android app, which is almost ready, and we are testing it with a few users, while our iOS app is still being developed.
Okay.
So, in the following few weeks, maybe 3 to 4 weeks, we'll be launching both on iOS and the App Store, and the cards will be available for orders on the app itself.
Okay, so 3 to 4 weeks, that's the timeline that you're claiming. So, Sambhav, is that where most of the funds that you've just raised would be allocated in to kind of market the product and, of course, build up the tech team to make this timeline a reality?
Yes, so we are deploying most of our funds in building a stellar team, and definitely will invest in marketing and growth.
Okay. So what's the plan for 2020? Sambhav, quickly tell us, some of the timelines or some of the targets that you've set for yourself in terms of the users or in terms of some of the numbers that you're looking to, hit.
Talking about the numbers, there are different numbers that can be achieved. We have plan A, B, C depending on various factors and how the growth looks like in the first couple of months. But the whole idea for 2020 is to grow, to acquire as many users as possible and learn from them so that we can focus on engagement and retention from 2021.
Okay, Sambhav, both you and your co-founder Kush are both 21-year-olds, and you're looking to target teenagers with this product. And considering the fact that you have so many experienced angel investors backing you, what kind of a dynamic do you share with your investors? Talk to us about that. Are you going to be working very closely with them and taking their guidance to kind of figure out how to launch this product?
Yes, so definitely, we just graduated out of college last year. So we keep conversating with Kunal, Amrish, and all our investors, even from Y Combinator, because we keep seeking guidance from them on a lot of things, and even they help out in making the right connections in the industry whenever required. So it's like we have our monthly calls with them, and that is where we discuss all our problems, and we keep sending them updates on a regular basis. That is how we engage.
All right, Sambhav, thank you so much for sharing those details with us. And as you said, you guys have just graduated and the product would be out in the next couple of weeks. So we wish you the very best for that. And of course, we'll be tracking that story right here on Startup Street. It's now time for a quick break. But coming up, we discuss the economic impact of Covid-19 that has had on consumer startups. Stay tuned for that, for this special discussion. Back, you're watching Startup Street. The economic impact from the rapid spread of coronavirus pandemic has rubbed off on startups across sectors. Companies in sectors like travel, ride-sharing, co-working spaces and others are starting to see the big stress from the dip in consumer sentiment. However, some sectors such as e-pharma and online groceries, on the other hand, are seeing a big jump and surge in demand owing to panic buying of essentials. In our previous segment, we saw Big Basket talk about the surge in demand on their platform, and now we have the CEO of online pharmacy platform 1mg, Prashant Tandon, talking to us on the show. Also joining us is Sanjay Kothari of Retsia to discuss about the trends across consumer internet sector. Gentlemen, welcome to Startup Street. Now, Prashant, let me start by talking to you. As twisted as this sounds, COVID-19 has created a huge business opportunity for online doctor consultation platforms such as yours at 1mg. Talk to us about some of these trends. What are consumers reaching out for, on your platform?
Yeah, I think what has happened with COVID-19 out there is a lot of the value of digital health platforms like ours has become very, very apparent. And if China were also an example, where the physical infrastructure has really struggled, and it's the digital infrastructure that has stood up to support the requirements. So yes, there is a huge surge of demand for teleconsultations, especially with respect to flu and fever. There's demand for e-pharmacy. People are looking for products and medication. And what this has underlined is another important thing. A lot of people actually do not want to go to a healthcare center and expose themselves for something that can be dealt with at home. And because it's just not safe. Going to a hospital or a diagnostic lab or a pharmacy or any physical location for something that can be taken care of at your home through a digital interface is actually, it's safe for the patient, it's safe for the community, it's safe for the healthcare worker. And this value is actually apparent right now in as stark a way as it could ever be. Hospital OPDs are down 30%. Online consultations on our platform itself is up 300%. All the requirements of course, products is already shooting through the roof.
All right. The fact that you said that users in general do not want to go to a diagnostic center or a clinic, the reasons are obvious for that. But talk to us about the fact that you said that you've seen a 300% surge on your platform. Are you tying up with more doctors, or how do you plan to ramp up your resources to kind of provide the kind of supply to this accelerated growth that you've seen in just a couple of days?
Yeah, so ours is a technology-enabled network model. So we tie up with independent practitioners who give us their time and then they consult on the platform. So certainly we are adding more doctors. We are also adding technology support so that the doctors can actually more productively consult with patients. So yes, it's given that at least we do not have to hire these doctors. The model is inherently very scalable. So any independent practitioner who has some capacity, some time and wants to contribute can just join a platform like ours and consult with patients.
All right, let me at this point bring in Sanjay to this discussion. Sanjay, we have seen a surge in demand on e-grocery platforms and e-pharmacy platforms. But talk to us about a similar spike when it comes to other consumer tech startups.
Sure. Thanks for having me here. So first of all, what we're seeing is a change in consumer behavior, right? And this is triggered by 5 major triggers. One is people are actively avoiding high footfall places like malls, supermarkets. They are avoiding close quarters like offices. People are actively avoiding intercity and inter-country travel. They are focusing more on personal hygiene, on cleanliness. and obviously spending time more at home due to the work from home policies that the companies are giving them. Key takeaways here are few sectors like retailing and grocery, as Mr. Hari was mentioning. So retailing has seen a net positive impact, somewhere around 15-20%. Now this has been muted in discretionary products like say mobile electronics, but has spiked through the roof in products like grocery and FMCG, which have seen, especially the last 2-3 days, have seen triple-digit growths. So that's about retailing. Now segments such as mobility have seen a fall, a temporary fall, because one, people have stopped traveling to offices. They are more work from homes. People have stopped going to airports, which was one of the major impact areas. So mobility has overall, in terms of number of rides, cabs have decreased somewhere between 12-15%, which is again, as I said, temporary and probably in a week or two should come back.
Yeah. Sanjay, quickly tell us the kind of impact that other sectors like food tech and co-working spaces have seen. What are some of the numbers telling you there?
Sure. So food tech, the impact has been a little muted. Actually, there has been a bit of rise in the food tech industry per se in terms of online ordering and delivery. Now, there are two aspects to it. One, for people who have a kitchen setup, right? These are the married men, people living with family. Now, these guys will avoid online ordering. They will cook at home, and these probably comprise 50% of the online ordering population. For the other bit, where people do not have a kitchen setup, the single living from away kind of people, they will continue to order online. But his average number of orders have decreased. So what people are trying to do is order from a more hygienic place. So hygiene plays a very important factor here. And people have started avoiding non-veg food. So non-veg per se, yes please.
Yes, go ahead.
So non-veg food per se has seen a very drastic decrease, almost 40-50%. Even desserts have seen a very drastic decrease. So in terms of OPDs, for the first 15 days, I think the OPDs, the number of orders per day has slightly increased between 10 to 12%. And from now on, probably we'll see a reduction.
Yeah. Okay, Sanjay, quick comment. I know you've said this a couple of times, the fact that the consumer habits are changing, and at this point it seems temporary, but do you think that this is going to have like a long-term impact, at least for certain sectors? What are some of the studies showing?
So we don't believe this will have a very long-term impact. Now, obviously, if the virus itself spreads to a stage 3, stage 4, then we might see a very high impact. But I think this is temporary. Okay. We might see the market bouncing back in 3 to 4 weeks.
Okay, Prashant, before I wrap up this conversation, let me quickly highlight the fact that your competitor Practo has recently launched a new monthly healthcare plan. So would we see some similar subscription plans coming from MG as well, or are you guys working on some other model altogether?
So at 1MG, we are trying to offer all kinds of help that we can, whether it's connecting patients with the government helpline as they need, giving them the information they need, or consultation. So certainly, I think the number of people today who are looking for support, that's actually in a very early stage, and it's only going to grow. And if you really look at it, we need actually more and more players to actively build this behavioral change of getting consultations through the platform. So I'm glad Practo is also innovating, and so would we be. So I think it's if you look at, say, the China example, they're doing almost more than 1 million a day online consultations during this coronavirus period, and India is actually way behind right now. We need a lot more of consultations happening, and the second wave, which will come soon, if China were to be an example, is around counseling and anxiety, just mental health management. So I think we are gearing up for to offer our services across those lines as well.
All right, Prashant, good to see a sense of solidarity between competitors right there, Prashant. And Sanjay, thank you so much for talking to us on CNBC TV 18. With that, it's a wrap on this edition of Startup Street. More news and updates continue on the other side. Stay tuned.